Nigeria's central bank has suspended 9 commercial banks from the interbank currency market. Now, these suspensions are a direct result of a failure, the CBN says, to remit money owed to the government. It is not a small amount of cash. It's over $2 billion. This comes after the central bank also tightened restrictions on the flow of dollars in order to domestic lenders in March. And that in turn has forced banks to delay hard currency loan and trade repayments and in turn increase their risk of default. Now, these banks in question, all 9 of them, failed to remit $2.1 billion. That's the government share of dividends from the state-owned gas company. The banks were supposed to pay the money into the government account at the central bank. The affected parties include First Bank, United Bank of Africa, UBA, Heritage, Keystone, Skye, Diamond, Sterling and Fidelity Bank as well. Let's find out exactly what's going on. Deji Badmus is live in Lagos right now with more data on the story. Deji, this suspension, according to Reuters, is linked, of course, with that $2.1 billion dividend payout. Why exactly didn't these banks remit this cash as they were supposed to the central bank?
Well, Rama, the banks are saying that they didn't remit the cash at the time they were supposed to do so because they didn't have dollars. There was no forex, and you know the situation of forex in this country. So the banks, most of the banks are now saying, look, as we speak today, they have the naira component of the money, but that they do not have the dollar component, and that if the central bank could give them dollar supply, then they would be able to pay. But some of them, of course, have come out to say, well, that they actually loaned out some of these monies to investors now in the electricity sector as well as oil companies, and that these people have not been able to repay their loans now because of business has not been good. But for the majority of them, they're saying, well, they have the naira component. What they just do not have is a dollar component, and that if the central bank could fund them with the dollar, if the central bank could sell dollars to them, then they'll be able to remit. And basically, that's it. But initially, the initial amount was around $5 billion. And we understand the central bank met with them some time ago, drew a timetable, and some of them were able to remit. And that's the reason why that money came down to around $2.something billion. So basically, they're saying if the forex situation in the country improves today and they get a dollar supply, they'll be able to pay back.
Given the liquidity difficulties we keep seeing and hearing about, especially in Nigerian banks, what's the outlook for non-performing loans in the country, especially those that happen to have a foreign currency component to them?
Well, I mean, the outlook is not a very good one, even though the central bank has continued to maintain that all is well. We know, for instance, that most banks in Nigeria have actually gone beyond the threshold of 5%, which is the threshold now set by the Central Bank of Nigeria for non-performing loans. We understand that some banks actually have the size of their non-performing loan portfolio now. It's as high as 12–13%. Which, of course, was the case of Skye Bank, why the CBN decided to intervene at some point. So the outlook is not good. And then you have, but in terms of liquidity now, there's no problem when you talk about the naira component, but the dollar component is a big problem. And you know what? With these 9 banks now that have been suspended from accessing a forex through the official window, we might see, and that's what some people are saying, we might see a situation where the forex problem will definitely increase because some of these banks will now have to resort to the black market to fund their forex needs. And so the black market could come under severe pressure and what have you, but we just have to wait and see. But in terms of the general outlook now on the size of the non-performing loans of most of the banks in this country, and those who are involved say it's not too good. But the central bank, of course, has continued to maintain that it's not beyond the manageable situation.
Right, we'll leave it there for the time being. Thank you for the update. That's Deji Badmus, of course, live in Lagos, keeping tabs on developments over there.